The near 50% run on Target shares this year is not over, says Telsey Advisory. That firm raises the price target now on the stock to $305. That's a 16% upside from here. It's probably below Pete Najarian's target. I'm sure it is, his target on Target, which he says, he claims he's owned since $65.
You know it's right.
I do.
I've caught flack this whole ride up. But, you know, Scott, it makes sense, and Telsey, I think, is right. I think where everybody made a mistake, if you go back to March and everybody said this is peak earnings. And because of that, we watched that stock actually start the day going higher, immediately reversed, went lower. It was trading about 167. It's almost not looked back since that time back in March, and it's been moving to the upside. I think a lot of it has to do with the partnerships that they've made. I think it also has a lot to do with the fact that they continue to invest in the business. They've put themselves out there saying they're going to be putting in $4 billion annually each and every year for remodeling, as well as building stores a little bit quicker and working on all the different accesses for people as well to make it that much more easy for people in terms of the online. They just seem to be doing everything right. Just this past week, they announced how they're going to be working with people to send them to college and master's programs and all the rest of that through their own sort of like scholarship sort of a deal that they've got at Target. So they really are doing things, Scott, in the right ways. I think the $9 billion that they took in terms of market share back in March is something that people didn't really recognize. But that's been the case. And when you look, where is it coming from? It's coming from Walmart. It's coming from Amazon. You're getting the middle lower, the middle upper. And I think because of that, this is a stock that is not done yet. And by the way, this is a stock that has grown into where they are. You know what the PE is right now, Scott? 22. Walmart's still at 25. So it still trades cheaper than Walmart does, even though it's made this unbelievable run. And Walmart started the year at 145, now about 149. So I can tell you, it's still less expensive. And this kind of is like back to the Disney conversation of what does the PE look like and is it stretched? Target, it is not stretched.
So, I mean, you have no hesitation about just not taking anything at all off the table. And if you don't, you don't.
Absolutely not.
No one says you have to if you really believe in the future of this stock.
Yeah. I think the commitment that they've made to continue to do what they're doing annually, I mentioned $4 billion. I think that really does speak volumes for, they could have just rested on their laurels, right? I mean, years ago, Brian Cornell talked about $7 billion. They're going to put it out there. They're going to redo stores. Well, now they're doing that $4 billion annually. So this is something where they are committed to make this absolutely at an excellent side. And when you look at all these partnerships, Scott, whether it's Ulta or so many others, it's amazing what they've been able to do in a very short time frame.
Yep. Props to you. Stock chart speaks for itself, right? All the recommendations that you've made on it and all of the grief that I've given you along the way.
It's okay. It's all good.
More power to you. And hopefully our viewers who hopefully have been along for the ride and have made some good money. Home Depot reiterated outperform at Telsey as well. Shan, that's you.
Yeah, we're excited for this report. I mean, we're going to see, I think, you know, sort of tougher comps in the second half of this year. But I think for the second quarter, if we get same-store sales above 5%, I think that would be a nice upside surprise. 45% of their business is professional buyers, so wanting to make sure that these big projects are still happening. I think we could get a little bit of a bump in the back half of the quarter as lumber prices have moderated. But the other thing to look for is just, you know, e-commerce in general. They have put a lot of money and a lot of effort in growing that over the course of the last year or so, and we expect that to still do well. There's no reason not to go to Home Depot, but having this second avenue for e-commerce is certainly something that we're surprised and pleasantly surprised about over the last couple of years, that so much volume has started to run through their e-commerce platform.
Jason, you don't discriminate between the two, Home Depot and Lowe's. You own them both, right?
Yeah. I like Home Depot. I like Lowe's. I like the home improvement trade. You know, I had owned D.R. Horton, you know, as a builder, and obviously when prices started to move, I exited there. But you know, from a home improvement standpoint, I think you need to own both of these names. I think there's continued upside. You know, and Home Depot's front, the only thing I would add to Shannon's point, they also built out 3 new distribution centers that I think will benefit consumers and customers from a logistics perspective and making sure that they're getting their items even faster than they originally have. So I like both of those names.
And I know we talked about Target a second ago, and Walmart, by the way, was also reiterated overweight at Stevens today. With Jason owns that. I know you heard Pete praise Target. He owns Walmart calls. Kevin O'Leary, you own Walmart. You wish you would have listened to Pete about $200 ago on Target.
Yeah, but I do own Target too, but Walmart has been a big disappointment. And I want to point something out about these names. You know, so much of these big box retailers depend on executional excellence of the management teams. And when I compare what happened back in March, let's just look at the different worlds, compare the performance. Walmart hasn't even kept up with the index, and it's fallen behind the group as well. I know it's a higher PE, but look at what happened in March, Target versus Walmart. Target gets into this program and says, look, you can buy stuff online from us, drive up to your local Target, and we'll throw it in your trunk. So many of the people who did that had never been inside of Target. So they were poaching Walmart customers with that advanced idea, getting the systems in place and making it work. And now I sell to both those guys because I have a lot of consumer goods products in my private portfolios. I fly to those headquarters. I meet with the buyers. You go into Target, you get a vibe in there, and that's culture from the CEO on down, that I can spend my career here. I can go to school on them. I can work my way up the management team. I can go online and service. It's a culture that they've delivered that has really, really made it an interesting company. And look, I'm still a shareholder of Walmart, but I'm saying, chop, chop. I mean, if you're going to redefine who you are, Walmart, you better start telling me your Amazon part too, because it's really about your online integration. And I don't think they've got that story out. And so they've got some work to do in the back end of the year.